Yo, what's up, YouTube? How you guys doing? Hope you guys are good. Hope you guys are living right. Welcome back to another video. In today's video, ladies and gentlemen, this is going to be episode 2 of the Bitcoin basics. Now, if you guys have been following this series, quite frankly, I said I would be posting every Friday, but shit happens. Things have to happen. So I was unable to post for a few days, but I'm back again with episode 2. Now, with that being said, ladies and gentlemen, we're going to be touching on a few topics in today's video. And the first topic we're going to touch on is active trading. Now, active trading. And by the way, I'm sure you guys love the sound of the mic. I'm in Keith Ren's studio right now. Y'all already know. Now listen up, guys. So active trading is what we're going to be talking about today. And I'm just basically going to explain a little of what I said in the previous video so you guys can connect. So in the previous video, I spoke about a whole bunch of different things. Like I spoke about one thing to avoid. I spoke about Bitcoin as a whole, what it is and how it came about and how you actually use it. I explained it's a store of value and the reason why most people find it a valuable investment. Now, as you guys might know, and as if you guys have been watching the markets lately, Bitcoin has been skyrocketing. It's been going up because it fell up to, I think, $25,000. Now it's up almost $30,000 today. So we're going to talk about active trading. Active trading, ladies and gentlemen. All right. So what is active trading in the crypto space or in any kind of space? So one thing you guys should understand is that there is one market as a whole known as the financial market. A lot of people call it the forex market. I personally call it the financial market. The financial market is a market that is 100% online, with the HQs or headquarters being in New York, Wall Street. If you guys have heard of New York, Wall Street, that is where it all goes down. Now, with that being said, I'm going to explain a few things. With the financial market, there are different kinds of instruments that can be traded there. The most common, or rather the most popular, is known as forex. Forex is just basically currency against currency. Zambian kwacha against South African rand, United States dollar against Japanese yen, so on and so forth. Apart from that, we have stocks. You can trade stocks on the financial market. Stocks such as Facebook stocks, Tesla stocks, Google stocks, and so on and so forth. I personally feel if you have it, for example, Gucci, I think Gucci's on the stock market. I'm not sure, somebody should check. Let's suppose Samsung. I love Samsung phones. I love Apple products. So I've got shares in all these companies. I buy some stocks for myself. If you own it, I strongly advise you should also have some shares in that particular company that you like, or the products or services that you use. Always invest in their stocks for you to have a gain in them. So with that being said, that's also found on the financial market, such as stocks. Okay, now in today's video, we're going to talk about active trading in cryptocurrency. Yes, so cryptocurrency also is found on the financial market, and it can give you access. It rather gives you access to trade the different kinds of cryptocurrencies. So how do you trade? First and foremost, there is what is known as a broker. A broker is a middleman between you and the financial market. So there are 1,000 brokers on this planet, companies that have created, brokerages and so on and so forth. Brokers such as Derive.com, Exodus, Pepperstone, and so on and so forth. I've used all these. They're actually great brokers, and this is not even a sponsored video. I'm just saying this for real. Like, honestly, these are great brokers. Now, a broker is a middleman between you and the financial market. You and the big guns, you and the big guys. So we use a software known as MetaTrader. Personally, I use a software known as MetaTrader 5, and I also use MetaTrader 4. On this software, you connect the broker and that software in order for you to access the financial market. On the financial market, you will find what is known as the cryptocurrencies, okay? And then they will be available for you and I to actually trade live trading. This happens in real time. So when I say being an active trader, it means you're going to be placing trades and trying to predict how the market is going to go. Whether it's going to sell, meaning it's going to drop or come down, or buy, meaning it's going to go up or rather escalate in value. Now, with that being said, ladies and gentlemen, I know most people might think, oh, So you just buy and sell and click those buttons. Well, no, that is not how it's done. Being a profitable trader takes a lot of time. It takes a lot of years, months, and so on and so forth. It takes a lot of dedication, it takes a lot of focus, and most importantly, patience and knowledge. You're going to need all those things in order for you to be a profitable trader. So with that being said, I would give you a random example of how Bitcoin dropped. Okay, now of course there are different kinds of analysis that we use, such as technical analysis and so on and so forth. We also use we use technical, we use fundamental, and just a whole bunch of different things. We use the news. We make sure we are following suit on what's going on in that particular area of where we want to partake in the trade. For example, with crypto, recently there were lawsuits filed at Binance being one of the biggest crypto exchanges on the planet. When shots are fired at a company as big as Binance, what is expected in the market is basically fear. All right, people get scared. They get scared. So when people get scared, you will find that the market starts to depreciate. All right, people start to sell, and then the value of Bitcoin as a whole starts to decrease. It starts to come down. That's what usually happens. If you're a smart guy, I remember in my previous video I had mentioned that while people are selling off because now there is fear in the market, people have started selling off. Me personally, I am buying. So I will give you I'll be honest about this. I'm going to show you guys the trades maybe in episode 2 or 3. I mean episode 3 or 4. When Bitcoin reached $25,000 and it was approaching 24,000, I had made a few trades. Okay, now this is what we call active trading, because I understood that, okay, if I make a few trades here and then the market starts to stabilize, because I looked at the chart, I looked at my fundamental analysis, I looked at my candlestick strategy and the market formulation, and I could easily predict that this market is just basically stabilizing. And after all this fear, the market is going to start skyrocketing up again. And I was right. I was right, ladies and gentlemen. I was right. So with that being said, I did place a few trades at when it was $25,000, and now Bitcoin as a whole has got to almost $30,000, meaning that in my case I have made a profit. Okay, in my case I have made a profit. But then suppose Bitcoin kept dropping. For example, I placed at 25,000. If the Bitcoin today is now at 19,000, it means that I have lost money. But of course, being a good trader means you understand the fundamentals of these financial markets, meaning that you understand where to, place a stop loss. Stop loss means, you stop your losses. If you're getting in too much losses, you can stop them. That's what that simply means. Or you take your profits, your TPs. You understand where you need to take your profits. You have the knowledge and mentality saying, once I'm in this trade and I make $200, I want out. I want my $200 out. Or you can lock in your $200 and then whatever you make at the top is profit. You can actually do that. You can actually modify and scale it like that. So with that being said, that is what is known as active trading, ladies and gentlemen. All right, ladies and gentlemen. So now let's talk about the second thing of today. So I had mentioned we're going to talk about a few things. The first thing being active trading, which we have spoke about already. Now we're going to talk about portfolio management. Okay, portfolio management in cryptocurrency. First and foremost, as I have explained in my previous videos, guys, cryptocurrency really is a store of value. It's something really amazing because it's decentralized. It cuts off the middleman. It has all these beautiful, good, things to it, or rather components to it, especially if we talk about a cryptocurrency like Bitcoin. It being the mother of all cryptocurrencies, it's something that has been very loud, and it's something that is very, very high in value. Right now, trading a little above $30,000 as we speak. So let's talk about portfolio management, because most people only hear Bitcoin. When they talk about cryptocurrencies, they only know what Bitcoin is. But there are over 7 million coins on this planet that have been created, obviously by individuals, but there's still a lot. There's also certain coins that are known as meme coins. All right, now with the previous sanctions, or rather the previous news and updates that happened a few weeks ago, I'm speculating, I think a few weeks ago, probably a month now, with Binance, when that news hit Binance, a lot of meme coins lost value. Meme coins lost over 50% of their value. Now, the reason why they are called meme coins, they are basically pump and dumps. Okay, now these are things that you should be very, 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 very careful and also very aware of. I'll give you an example. Okay, I wouldn't really call Shiba Inu a meme coin, but it's something that started off as a meme coin. Actually, I think I would. Shiba Inu is basically the mother of all meme coins. You see, when this coin was created, Shiba Inu, it was supposed to be a meme, and I think Elon Musk was involved. But the second he started promoting that coin, it started to gain a lot of value, a lot of traction, and there are a lot of people that made a lot of money, 10x, 100x, and so on and so forth, just with the meme coin. So those kinds of coins lost a lot of value. The way you can identify an original coin and a meme coin is very easy. You look at its market value. Okay, now for example, you go Shiba Inu, just go type Google Shiba Inu market value, you check the market cap. When you check Bitcoin's market cap, it's getting closer to gold, if not already above it. It's over $1 trillion market cap just with Bitcoin. And then you look at other well-known coins, the coins that I would recommend for you to have, because now we're talking about portfolio management, how you're going to diversify your portfolio in crypto. I do not encourage people to, this is not financial advice, but I do not encourage people to only hold one part of a cryptocurrency. For example, Bitcoin, just holding Bitcoin alone. No, I do not suggest you do that. I suggest you diversify your portfolio, because I mean, you know, even the Bible itself says, do not put all your eggs in one basket, because you might not know the kind of bad luck you have in this world, something like that, if I remember my Bible correctly. But what I'm basically just trying to tell you is that you need to manage your portfolio properly. So now the best way you can actually do that is to identify coins that have bright futures, coins that have a stable project behind them. Why did these people actually create this coin, and how are they going to be using this coin in the future? Those are the different kinds of things that you're going to need to look for. Those are the components that you're going to need to look for in order for you to diversify into some good coins. I highly recommend coins such as Ethereum, coins such as XRP, coins such as Cardano. Is it Cardano? Yeah, such as Cardano. I highly recommend coins such as and there is also Stellar. I love the vision behind Stellar. I'm holding some Stellar, so do not be surprised. Let's suppose Stellar is very affordable right now. Cheap, it's very cheap. So let's say you buy $100 worth of Stellar, and then tomorrow its value goes maybe 1000x. Literally, that $100 is going to become $10,000, just like that. That is how people make money with crypto, but it is not guaranteed, ladies and gentlemen. It is not guaranteed. It does not happen every other second, does not happen every other day. No, you need to learn to study these different projects, because there are so many. Okay, so portfolio management, basically, ladies and gentlemen, is do not put your coins in one basket. Don't just put them in Bitcoin. I highly recommend, because Bitcoin is super volatile, just like other cryptocurrencies. One thing you guys should notice is that if Bitcoin is doing bad, every other cryptocurrency is also doing bad. Trust me, that's how it works, because it's the mother of all cryptocurrencies. So what you guys need to understand is that when you have made some profits from maybe your Bitcoin, maybe you are trading, then you make a profit, understand stable coins such as USDT. USDT is a stable coin that you can just store your coins in there, and then your coins are not going to fluctuate. They are not going to gain value, they're not going to lose value. But in the sense of things like Bitcoin, things like Ethereum, and these other different kinds of cryptocurrencies, you'll find situations whereby when the market is bad, they will also lose value. So understand that portfolio management. And with that being said, that's going to be the video for today. That is episode 2. Let me know if you enjoyed it. Let me know if I should get me a mic like this, because yeah, I just ordered one. But with that being said, thank you so much for your time. Make sure you guys hit that subscribe button, turn on that notification bell, and I'll see you guys in episode 3. Let's get it.